Welcome to your Daily Five. I'm Bruce Fraser, your host for today. We are going to do a Wyckoff Accumulation Workshop. This is somewhat related to the recent events and short selling activity in GME, Gamestop, and also just a general overview of accumulation. We've talked about this before. For many of you, this will be review. But I want to point out that I've been looking at these schematics for 40 years and they continue to teach me things. And so I think it's a good idea to go over them again and again and again. Here you will see a great resource, the Wyckoff Power Charting. Let's review a blog of mine from 2015. So go back and look at that. So to get started though, a couple of announcements. TSAASF is going to have a great presentation by my friend Andrew Cardwell, February 9th, 5 o'clock Pacific time. Make sure you join Andrew for a discussion on RSI and the Cardwell RSI method. There are a couple of great videos on the website. They're available for everybody to look at. Martin Pring does a great video on the current state of the markets and the outlook for the first half of 2021. Joe Turner and Jim Copas, portfolio managers with Martin, talk about strategy and tactics to take advantage of the upcoming 2021 year. Okay, and then for more resources on what we're going to talk about today, WyckoffAnalytics.com. WyckoffAnalytics.com has a lot of great resources, written, video, etc. And I also want to point out here that the market report, where Roman and I write a weekly stock market letter looking at stocks from a Wyckoffian perspective and a look at the market. Okay. You can see here that there's the issue of quality of ownership in all aspects of the market, really. But today we're going to talk about the dynamic and absorption that occurs through the course of an accumulation area. Recall that accumulation is the period where stock is being supported and purchased systematically by large informed interests. There are many of these interests. We call them the composite operator. They work very stealthily, very strategically to accumulate shares throughout the course of the accumulation area without putting the stock up on themselves. This occurs after a long downtrend. The downtrend is a period where stock prices are weak. And this is because stock has been distributed from strong hands to weak hands. The definition of a downtrend is weak ownership of the stock. Weak ownership generally are sort of the unknowing institutions and also the public. And so we have here a schematic of the idea of weak hands. And what happens through the course of accumulation is stock is transferred through absorption from weak hands to strong hands. And so the strong hands ultimately absorb the stock that's available. And this is in stocks, companies that composite operators want to own. Not all stocks that are in trading range are under accumulation. This is very important. But as we can see here, there are attributes of accumulation that take place as we go from phase A to phase E, which is the beginning of a new uptrend. Part of what happens during accumulation is stealthily, the volatility tends to come out of a stock because there's less and less of it to buy. This is a supply-demand relationship. Supply diminishes, demand remains relatively constant as the CO carefully buys shares, absorbs shares, supports the market, puts support underneath the stock price as they buy shares. Eventually, there comes a point when the stock is largely unavailable to buy in large quantity. And so as a consequence, the nature of the way the stock trades changes. It becomes much stronger in its uptrend, much shallower in its reactions, and then the uptrend begins. This is the part about GME that I want to point out. Part of the conclusion of accumulation and what helps to propel the stock out of the accumulation area is constant demand. The same amount of demand when there's no supply left can drive a stock into a dynamic uptrend. But something else happens, and that is that there are still short sellers operating in the stock throughout the course of the accumulation. And then when the stock jumps out of the accumulation area, the short sellers become concerned, maybe panicky, and start to close out or cover their short positions. And this becomes an important source of demand that helps to drive stocks up in a dynamic way. So we always consider that short selling is part of the reversal process into a new uptrend at the end of accumulation. Now, there are degrees of short selling. Most stocks have some short selling in them, but it is a manageable portion of the available floating supply of stock that is out there trading. So short sellers are able to cover their shorts at demonstrably higher prices in most cases, but they can cover their shorts. But in the case of GME, you have a stock that is they are unable to cover their shorts because too much of the stock has been shorted compared to the available float. Okay, so here is another example of accumulation. This is an older study that I showed a number of years ago. Here's an accumulation structure. This is a real case study where a CO type investor bought a huge number of shares of Netflix. And so he sold about half of his position, which was a whopping 3 million shares of stock. Well, he bought this stock in the accumulation area where this green line is, and that's an average price of around $58 a share. At the time that he sold it above $314, the stock had jumped out of the accumulation area and gone into a big markup. Now, here's the thing. This composite operator had bought about 9% of the stock, the floating stock available, significantly reducing the available stock or absorbing a significant number of shares. The only thing that'll get a CO to sell their shares is much higher prices. And so here, bought at 58, sold at $314 right about here, and Netflix continued to climb higher. This is a little monthly chart in the cutout here. So here is the idea of accumulation as performed by the CO. We as Wyckoffians want to participate with the CO. We want to watch their footprints on the chart. We want to follow what they are doing, and at the appropriate moment in the pivot, buy the stock and ride along with the CO as stocks go to ever higher prices. Here is Gamestop, and you can see here that the stock has gone through about a year of accumulation, a significant amount of time. You can see the volatility coming out of the stock, which means that the stock was being absorbed. This decline here, which is the climactic decline into the low, followed by an automatic reaction, selling climax automatic reaction, sets the range, resistance and support for the trading range. The best place for a short seller who has a large short position in a stock, and the stock went down a very long way, is in the final throes of acceleration into the selling climax, because this is when the most amount of stock is available and most of the ability to be able to buy stock, cover, and be able to cover your entire position without riling the market up. So this is a great tactical place for short sellers. Some short sellers want to hold the stock all the way to zero because they think the company is going out of business. But as we know from the Gamestop example, we can see here that the stock was being accumulated, maybe by the CO knowing that there was such a large short interest in this stock that there was going to have to be significant short covering, which is a form of buying to drive the stock up to higher prices. Well, now the stock has gone upwards of over $400 from this low at $3.15, which is quite dramatic. But the cause of this panicky buying is these large short sellers who are really largely trapped in the stock. Okay, so let's look at some more stocks here from the perspective of accumulation. By the way, I have a blog coming out probably today actually that is going to cover more on the issue of GameStop and the dynamics of accumulation and how it affects the short sellers and short covering and so on. Here is First Solar weekly chart. This I think is quite a fascinating chart because you can see that the accumulation seems to go all the way back to arguably 2011. This is a very large trading range, and something very interesting has happened is that you've had this big jump up to the top of this resistance area. It's now jumped out. It's getting a little sloppy in here, probably is going to need a pause, but if it can pause here in a tight, quiet range, this would argue well for accumulation being complete and the ability to go into an important uptrend. This is a gigantic cause. And you can see the relative strength is now in an emerging uptrend. Here is a chart of the biotechnology ETF. This is looks like it's up and out. Look at this change of character here. It goes down, has a minor spring of a previous low in 2019 on the COVID decline. Then it jumps up and out, and look at this flat reaction above important resistance, and now it's starting to mark up again. Well, there could be a big cause. This looks pretty interesting, and also we have an uptrending relative strength line. So let's look here at a longer term period. We can see that since 2015 that biotech has been in a big trading range, and now series of higher lows, jumping out, flat reaction, and new uptrend. So this looks very promising for a really big emerging uptrend. Here is Boise Cascade, interesting stock that has sprung these two key prior lows. It's jumped up to resistance. It's paused in a shallow flat reaction. Now it's back up. We want to see if it can stay above this resistance area. Relative strength is positive in a good uptrend. This looks very constructive. And we can see here longer term view back to 2013, two important resistance areas taken out, a real change of character in the way that Boise Cascade is trading. So let's see how it acts up here. This looks pretty interesting as accumulation. Green Brick Partners. So here is a very long-term area back to 2015, a jump up and out. It doesn't even really pause, but just keeps zooming ahead. And here is, and that's after a spring. Here's a longer-term view. Big accumulation, looks great. Hey, thank you so much for being here. We will see you next time on your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.